with us, Head of Research at Religare Stockbroking. Siddarth, good to have you back on the program. Thank you very much. We get follow through, maybe. I mean, at least right now, you look at U.S. equity futures. You look at the dollar. It's all going in the right direction, so as to speak. So maybe more gains ahead. How are you looking at things near term?
Hi, Prashant. Thanks for having me on your show. Prashant, we have been optimistic on markets since quite some time. And, we have been talking that despite high inflation, despite stronger dollar index, our markets were buy because of the domestic consumption theme. And the way there was too much of pessimism, I think most of the people, if you just look back, a week back or 2 weeks back and check on, social platforms or your channel, a lot of people would talk about recession. A lot of people would talk about slowdown and how big correction is coming. And I think this is the nature of market, that at 18,000 people will talk about 15-20% upside, and at 16,000 they will talk about 13,000, 12,000. So we don't follow that way of predicting markets. We have been optimistic around 16,000 odd levels, 15,500. 18,000 to 18,500, I believe, would be kind of levels where we might see, some respite in this market, or we might see, some supply coming into this market. And why I'm saying that, Prashant, yes, there is a downtick in U.S. inflation, and that is cheering this market. That's the reason dollar index has fallen, and yields are also, correcting a bit. But let's not forget the fact that many economists believe, and we too feel so, that Fed is probably overshooting, and the repercussions of that would be felt once you start seeing the job data coming out. So rather than getting excited by seeing the CPI data, we won't go too optimistic on this market, because when CPI data was not good, we were looking at jobs data and being excited. So now when CPI data is turning favorable, we are just hoping that job data doesn't turn unfavorable, because if that turns unfavorable, then all these gains would be like probably 1 or 2 days gains, and you might see a correction happening. Even if I have to wear my old hat of technicals and see that this market is consolidating since last 1 year, Prashant, and now we are on the upper side of the range where 18,000, 18,500 we have seen supply, around 15,000, 15,500 we have seen buying interest emerging. And these range has been breached on the both sides, and again market has fallen into this range. We are at the upper band of this range, and we won't be too excited about this market. Though structurally, the domestic consumption story and India is a better place to be, that story remains, but at a price not at any levels.
Siddarth, good hearing your thoughts in the market. Same time last year when we were at 18,000 looked so different in terms of what was driving it, right? There was no cautious in the market. Don't see a case for further upside from here on. In terms of sectoral approach, what would be the best way? And do you see downside or just marking time around this 18,000 level?
No, what I meant is that you may not see a significant upside from here, and you can probably see a decent downside from here, or maybe a prolonged period of consolidation. 200, 300 points here and there, we touch new highs, or maybe we go to 8,700, 800. That's not a substantial upside for people who have time horizon of 6 months to 1 year. So if there is a dip, maybe towards 17,500, 17,000, that is where, probably again the case can be built for investment scenario. That is what I meant when I say that I'm not very optimistic from current levels. If I have to, talk about sectors which we are liking, then obviously we would, go more from a domestic theme perspective, and we are seeing a decent traction happening in cement space. Not all numbers which came, in this quarter were very encouraging. So like from our coverage, Ramco Cement disappointed, but there were names like Dalmia and Ultratech Cement which have done pretty well. I think story by now is known to all, that how capacity expansion is going to take place in next 2-3 years, how the power cost, which has been very high, which led to deterioration in margins, would now act in the opposite direction, and margins would improve, how green energy is something which these guys are planning to use over a period of time. So that is one space. Ultratech and Dalmia Bharat is something which we are liking. Auto names, you look at the kind of new cars which you are seeing on road, but let's not forget that still the purchasing power of Indians are not very high, and now we are liking something which has not done well in last 5 years, which is Maruti. Market share has gone down from 52 to 43%. But now what we are seeing is it's not doing too much of innovation in terms of new models, but it is launching its existing models in different avatar, like, you know, Alto or Swift in CNG. And that is where we believe that there would be a lot of traction which this company would get. Maybe not the old glory would be back, but there would be certainly increase in market share from current levels. So that is one stock where we have recently upgraded our target price, and we are anticipating decent upside. There are, you know, various names in FMCG also which we are liking, but we can talk about that some other time.
No, absolutely. Would love to, Siddarth. We're just running into market closing, you know, so we'll leave it there.